Welcome back to Wall Street Confidential. After last week's rally, you might be wondering, is now a good time to buy on the dip? So we've brought our expert here, Jim Cramer, for some analysis.
Big psychological change going on here, Farnoosh. There was a persistent fade the strength market, and every single time the rally occurred, the futures rally, you had to sell it. That's now over. It's just over. Because there's too much money coming in. There's too many bears who have been converted to bulls. There's too many people who think that the pricing reflects a depression. I think the pricing reflects a recession. But that means that any time it comes down below here, you better believe there's a depression coming. And I think all the actions by the governments take that off the table. This is not a prescription for making a lot of money. But I do not believe that you need to avoid this market. I do believe that traders can make money in. I don't think investors can. I don't think investors can, because what will happen is the stocks, because of the volatility, which I know is declining. Rick Bensinger has a good piece on it. But, you know, Bensinger, here's my big issue. My big issue is that stocks are trading in ranges I've never seen before. So I could do a video that says Nucor should be bought at 38. And then it could be at 45, so therefore it can't be bought. Then it could go to 32, and it would have been bad to buy at 38. We are seeing ranges where you better have something else going for you, like a dividend. But I do believe that there is so much money coming in and so little money coming out that until we see either a severe spike in unemployment or more hedge funds going under, you're safe. You're safe to buy.
But some people think those are the realities that we've yet to experience.
I know, and I get that, and I feel like that it's why I don't think it's an investable market. I do think it's a tradable market.
And actually, just to highlight, you think there'll be a failed assault on Dow 10,000 by year's end?
Shorter than that. I think that, you know, one of the things that happened in 2932, and I don't think we're going to have a depression, so therefore I think it's better, is that we tried mightily to get back to that level and failed of 29. Now, I think a more likely scenario is that the Mercks of the world are very undervalued. The Pfizers of the world, because their bond equivalents in a world where interest rates are going down, can stabilize the Dow, which will then be brought down by other industrials. But when you look at, I was looking at Alcoa this weekend. Now, Alcoa's like a $19 book value, and it's at 11. It's got to be worth something to someone, even as the numbers come down. There are many reasons to buy. To sell is only one reason. You think there's a worldwide depression coming, and I think that the swift action of the last 2 weeks takes that off the table.
All right, thanks very much, Jim Cramer. And of course, tomorrow we'll have a new president.
Yep.
Hopefully. Thank you very much for that insight. And as a reminder to viewers, if you missed our great conference earlier in October, we have a DVD that's coming out. It's spectacular. You want to stay tuned for more details on that.